Hi, I'm Kalila Reynolds and welcome to Taking Stock. We're bringing you all the latest business news and telling you how it will affect you and your money. But before we get started, head over to takingstock-ja.com to subscribe to our newsletter. You can click the link in the description box below and make sure you watch to the end because I have a giveaway coming up. Now come on, let's get this money.
First up, the PNP and JLP are making their final attempts to win your vote as September 3 fast approaches. The PNP is promising light bill subsidies and rent-to-own homes, while the JLP is promising billions in grants and loans to MSMEs. We'll examine their economic policies with news editor at Television Jamaica Dashan Hendricks and financial analyst and contributor to Finance Twitter JA Mark Gale. And later, the analysts weigh in on the latest market developments. The Bank of Jamaica now says they expect the economy to contract by as much as 10% this year, and Derrimon Trading Company is planning an additional public offer APO. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
Bank of Jamaica BOJ Governor Richard Biles says the economy is now projected to contract by between 7 and 10% during the 2020-2021 fiscal year as a result of COVID-19. This is a sharp decline from the 4 to 7% range the central bank had forecast earlier this year. Governor Biles says the impact of COVID-19 on the domestic economy has been significant, noting that weaker performances are expected within the transport, storage and communication, electricity and water, construction and hotels and restaurant sectors between June and March 2021. The bank is, however, projecting that partial economic recovery should start in the 2021-22 fiscal year with anticipated growth of 3 to 6%. The economy is, however, not expected to return to pre-COVID-19 levels before 2022-23. The cost of the opposition People's National Party's PNP election promises has been estimated to be some $70 billion, while the JLP's recovery plan is in the range of $30 billion. The numbers were provided by Minister of Finance and JLP campaign spokesperson Dr. Nigel Clark and PNP spokesperson on Finance Mark Golding during the second of the 3 election debates. Among other things, the PNP has promised rent-to-own homes, a monthly subvention of $4,000 towards their utility bills aimed at affecting 360,000 households, a $400,000 grant to 10,000 households to improve property, and grants to teachers. Golding said there would be no new taxes to fund the PNP's election promises. However, during the debate, Dr. Clark noted that the PNP's plans were a big bag of tricks. Among his party's promises are 10,000 reserved housing solutions that will not require deposits for persons under 35 years old. Other big-ticket items on the JLP's list of commitments are grants to MSMEs, unemployment insurance, and lower interest rates at the Students' Loan Bureau. The National Commercial Bank NCB recently introduced a quick save account to make it easier for unbanked and underbanked individuals to open accounts. NCB says with its new account, individuals will only be required to present a Government of Jamaica issued ID, a tax registration number TRN, and $100 to become a bank account holder. The big difference implies the removal of a proof of address and references. NCB's announcement follows recent efforts by the Jamaica Bankers Association to make bank accounts easier to access. NCB says the Quick Save account will allow people who can declare a specific source of consistent income, such as pensioners and PATH beneficiaries, to receive their payments electronically. They will also have 24/7 access to the funds through ABMs, point-of-sale POS machines, online banking, and NCB's mobile app. QuickSave account holders do not have to maintain a minimum balance, however the account balance should not exceed $250,000. Derrimon Trading Company is the latest company to announce plans to approach the market for fresh capital through an additional public offer APO. If shareholders approve at their upcoming general meeting, Derrimon could become the third junior market company to effectively graduate to the main exchange. That's because a fundraise would likely push it beyond the limit on share capital allowed for junior market companies. Epley and Key Insurance transitioned to the market in late 2018 and 2019 respectively. A date is yet to be announced for the general meeting. And speaking of APOs, Barita Investments has launched an online stock solution, BOSS, to support its now opened additional public offering APO. The web portal allows fast and efficient processing of offers to Barita clients and non-clients. BOSS facilitates the electronic submission of electronic public offering EPO applications to the Jamaica Central Securities Depository JCSD. It provides a phased approach of the company's digital transformation plan and was intentionally launched in time to provide easier access to those applying for their own APO.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. When we come back, we compare the economic policies and promises of the JLP and the PNP as we head into the election. This segment of Taking Stock is brought to you by Bulwark Insurance Agent. Insurance made easy. Welcome back to Taking Stock. What do you want from your next government? A rent-to-own home? Money for your business? $3,000 off your light bill? These are some of the campaign promises coming from the JLP and the PNP ahead of the September 3 general election. Joining us to discuss are news editor at TVJ, Dashan Hendricks, and financial analyst and contributor to Finance Twitter, J.A. Mark Gale. Hi, Dashan. Hi, Mark. Thanks for joining me.
Hi, Kalila. Hi, Dashan.
Hi, Mark. Hi, Kalila.
So, Dashan, you were my co-questioner at the debate on Thursday night. What were your impressions of the panelists?
My impression of the panelists is that we had a great debate yesterday between Mark Golding and Nigel Clark. But to me, it seemed that Nigel Clark was a little bit more prepared than Mark Golding was.
I actually thought the same thing. So Nigel Clark came, look, he seemed like he was rehearsing for several days, possibly a couple of weeks. So he had his notes ready. You saw the big book that he brought with him, Dashan? Yeah, he had the big book.
People putting his notes on the lectern and all of that.
Yeah, I thought Mark Golding missed some serious opportunities, because even at the end, when there was a chance to ask your opponent a question, Mark just went off and didn't even ask a question.
He made a statement instead.
Yeah, he ran out of time at the end and didn't get to make that pitch vote for the PNP at the end, whereas Nigel Clark seemed very rehearsed, very prepared. He anticipated some of the questions. And so I personally gave the edge to Nigel Clark in the debate. What about you?
He seemed to be well prepared. He was a little bit calmer in my mind. Mark, he's prepared as well, but I thought Nigel, as I said before, was a bit more prepared than him, and it showed.
Mark, what were your impressions of the debate?
Yeah, so I thought the debate was really, really good. I had high expectations, especially of Mark Golding, to be very honest. I did expect...
Your namesake.
I know. I
or
know.
you're his namesake.
Well, exactly, right? But once he walked out, there was something about that initial walk that he already looked defeated. So it didn't surprise me when he couldn't pull it together. Especially for the first two segments. And I think that it, by far, I think Dr. Clark had a much stronger performance. He had a better command of the data. He presented a lot of data. I think he was a little too esoteric sometimes, so which is, I guess kind of like his modus operandi, right? Like he likes to, if you're talking about data, that is his love language, right? Like he can talk data all day long.
His love language.
And that's the truth, right? And so you can't go to him with any data, so from that perspective, it wasn't surprising, and it was good. So I did want him to be a little more relatable, kind of break down some of the terms.
Let's get into some of the issues, not just from the debate, but also from the manifestos, because both parties have put forward their proposed economic policies and their plans. So let's talk about that, Dashan. The JLP has billions of dollars of grants. The PNP has several subsidies as well. Some are calling it handouts. I call it a handout. Call it what it is. What do you make of the proposals of both parties on the economic front?
All right, when I first read the JLP manifesto, it felt to me somewhat like a budget presentation. And a lot of it, when you compare it to the 2016 manifesto, some of it is a carryover from the 2016 manifesto, things that weren't done. And some of it was new, looking to recover from the COVID. That was my initial impression. The PNP, understandably in opposition, would have to come with something different. And that's where I believe they came with a lot of the promises that they had, the biggest one being $48,000 per year for a couple 100,000 people. They started the week with it being for every household and ended the week, especially yesterday with the debates, with it being just about 360 to 370,000 households getting that grant from to pay light bill, well, towards their electricity and their water bill. So it's understandable that they would have to come with some more promises than the JLP if they are to try to wrest powers from the government at this point.
You know, Mark, some people have compared this utilities subsidy policy to the JLP's 1.5 tax plan that they promised in the 2016 election, which is largely credited for putting them over the edge. They ended up winning with a one-seat majority. Do you see any comparison between the two?
From an economic standpoint, absolutely not. Because so the beautiful thing, you know, if you want to use a word about the 1.5, is that it had the added benefit of transitioning a chunk of the tax revenue from a lower compliance. So PAYE, the average compliance rate for PAYE is about 60 to 70%. So, for example, if you know government is supposed to collect $10 billion in PAYE, they will only end up collecting, you know, between $6 and $7 billion, right? Just based on the way that the compliance works. Where so that's on the PAY and the direct taxes side. On the indirect taxes side, especially, you know, GCT, SCT on fuel and stuff like that, the compliance rate is a lot higher. You're looking at, you know, 80, 85%, 90%. So just shifting that $10 billion tax revenue from PAYE to gas tax, for example, or to, you know, indirect taxes, consumption taxes, the government will be able to collect a lot more money, and you see it. You know, you see it in the tax receipts and the government revenues. It has been increasing steadily since 2016. It just so happens that, you know, in that particular instance, the shift from, you know, PAY to indirect taxes actually is better economic policies generally. Though the $48,000 per year is such a horrible policy. Like when I read it, honestly, I first of all, I was looking forward to this wealth plan, right? I read through the manifesto and it says the wealth plan is coming, and Me too.
I was highly looking forward to that wealth plan.
And they kept talking about, okay, Peter Phillips, he's going to unveil it, and, you know, so Damon Crawford didn't want to preempt him, all this stuff. So I was really...
Because I thought, okay, the JLP had poverty to prosperity. Now PNP's wealth plan, let's see what they're coming with. But it turned out to be a handout.
Exactly. Well, it turned out to be a rehash of a lot of the stuff that's already in the manifesto. And then that first point, they led with that $48,000 per year. You know, it was a big cash handout, and it just sends the wrong message. And so when I was thinking about the two approaches, right, the way that when I'm digesting both of these, you literally have two philosophical different approaches to government. The JLP is saying, okay, we are going to restructure the economy such that you are provided with more opportunities so that you can, you know, make more money on your own, and you can keep more of your money. If you look at all of their policies, that is generally the philosophy running through those veins. The PNP, with these plans that they've put forward, it's a complete opposite. It's more, okay, we are going to take the government and then we are going to just dole out cash for a variety of different things. Whether it is, you know, we're going to set up a $2 billion fund for entrepreneurs, like right out of school, or it is, you know, you know, this $48,000 plan, or like they have all these different quote unquote funds.
But Mark, isn't this the PNP's basic? They're coming from socialist roots, remember? So isn't this what they stand for? Dashan, let me hear you on this. Do you think Mark's criticisms of the PNP are fair?
Just to backtrack a bit, the 1.5 plan, when the JLP presented it first in 2016, they came with it to say we could increase the tax threshold, the income tax threshold to 1.5 million without enacting new taxes. They eventually had to enact new taxes. So from the point of view in which both of them could not say how that could be funded, both of them had that problem. But when you get down to the issue of the $48,000 and the funds for entrepreneur, it is not, especially the funds for entrepreneur, it is not fundamentally different from creating loans and grants through the DBJ, whereby an entrepreneur could get some grants to help them. But in this point, the PNP, I believe, is targeting targeting it more towards young entrepreneurs. And when you do that, now you have a better target in that way. But in terms of just having that as a grant to say, okay, if you are a young person, you have a business idea, we're going to give you some money to start it. My difficulty with that, we know that many businesses within the first 1 to 5 years fail and don't go up, and a lot of young entrepreneurs typically don't come with a proper business plan. They have an idea in their heads, which they will say, okay, I believe I can do this and I can do that. But if you say, pencil this out and let's see what you really want to do, they don't have a proper plan. How are we going to guide these to give a young entrepreneurs to start business is not a wasted fund, because you can't take taxpayer money and just waste it. And just like that, you must ensure that if taxpayer money is going to be spent in this way, it is creating jobs and helping to boost the economy, because that must be the ultimate aim of any handout or grants that the government is going to give anybody.
So maybe it should be a confidence. Maybe it should be a confidence grant rather than a confidence loan, since so many of them might be unlikely to be repaid. If you're going to give somebody money and you're not sure that they're going to pay you, I rather just call it a grant.
But they do have a grant as well.
Well, yes, they do.
So I hear. So, all right, a few thoughts. One is that on that particular point, I agree with Dashan in the sense that, okay, yes. First of all, I want to be clear. I'm not against, giving grants to young entrepreneurs. I'm a young entrepreneur myself. Maybe not as young as I used to be, but I'm an entrepreneur myself. So I definitely do appreciate. I think that there's a space for that. The question is one of priorities. Is now the right time to be doing that? We're, entering a new phase of the economy where we know the BOJ has already said, our GDP is going to contract by roughly about 10% is what the current projection is. It could even be higher. And then we'll have so many other things, so many schools to fix, so many police stations to build, police stations to repair. Crime is a major issue. Those are the main kind of like points where resources should be put, right? So the question, so it's not a matter of whether or not giving entrepreneurs a grant is a bad idea. The question is when and the timing, right? So that's the first point. And the second point, in terms of Dashan, what you had said about the 1.5 and the raising additional taxes, I agree with you. They ultimately did have to raise taxes, but the key distinction there is that what they had promised was to basically just give people that earn $1.5 million the tax break, and that's it. Mm-hmm. But once they went into office, the IMF essentially said to them, listen, you cannot do that because that's distortionary. So you have to give everybody that earns the first $1.5 million, you have to give everybody that tax break, right? So that made it more expensive. So naturally, as a result of that, the plans changed and then they had to reject. So I'm not, defending one way or the other, like whether or not.
Not just that, but remember the plan for them to fund it, they were depending on, what was it, receipts from the SCT that they expected were in a particular fund, and then it turned out not to be there as part of the consolidated fund, so they had to go back from scratch and find another source. Exactly. But in the time that we have left, I want to look at the housing policies. So one promising 70,000 homes, another promising 150,000 homes. What really stood out to me is the PMP's rent-to-own plan, as opposed to the JLP's 100% mortgage financing through the NHT. Dashan, how are these two things different?
We have 100% financing through the NHT already, so that is not really new. The rent-to-own thing is where I have some questions. I mean, I spoke with Derrimon corporate directly about it, and I was saying to him, Derrimon, we have 100% financing already. Why would you want to rent-to-own? And he was going through the process to say, look, we don't want to give the people the house. And then some people, we have to get them in the habit of paying a rent, paying a mortgage. But the rent-to-own, it is just, to me, whereby we have to try to stay away from.
Is it just a different way of saying 100% mortgage?
It is really 100% mortgage, because I mean, if you put somebody in a house and say pay some rent, and part of the rent goes towards a deposit over a period of time, which they have not defined, by the way, or how long, depending on the cost of the house, which they have not expressed explicitly to anybody. But we just have to be careful that we don't put people in a house whereby when they believe they have paid the deposit, they stop paying for it. And in the past, we have built houses, especially in the inner city, and people get the houses, and when they get there, they say, hey, we're not paying any more money for the house. This is our house. And what are you going to do? You're going to take away the house from them, or you're going to let them live in it. But some way, somehow, the rent to own thing is something that I would think about a little bit different from what the PNP is proposing.
If it's a commercial institution, they do take away as a matter of fact, NHT does too.
But they take longer than a private entity.
Mm-hmm.
And especially if these people believe the government gives them the house, because that's a problem we'll be having if people don't want to pay. Government give them the house. And especially if they believe that they are supporters of the PNP and their government give them a house, they're not going to want, if push comes to shove, they're going to say the government gave me this house. And that's what happened before in the past when houses were given to people to pay for, and they said they got the house from the government.
What do you think about it, Mark?
Okay, so I'm going to take the contrarian view. So I agree with some of the concerns that Dashan has raised, and they are definitely valid concerns, right? This is one of those programs where, I got a lot of flack of it from the JLP side because I came out in support of this program early on. Like once I announced it, I thought it through and I said, I actually really like this. I mean, we don't know, what exactly the details are, and that is still TBD. We don't know if it's only going to be done through the NHT. In the wealth plan or the manifesto that they said that they're going to pass a law, to facilitate.
Wealthy, Mark. Don't forget the why. Wealthy plan.
I'm sorry.
Important.
I'm sorry. The wealthy. Absolutely, the wealthy plan, right? So, they spoke about new legislation, right? And so if there's new legislation, there is a potential that it could also be a scheme that commercial entities could opt in also, right? So anyway, leave all those things aside. The reason I like it is because from my perspective, the way to build wealth is to allow the acquisition of assets to make it easier for everybody to acquire assets. No, you can make the argument, okay, 100% financing does that, right? And I agree to some extent it does, but at the same time, there are some people that may not necessarily want to jump into owning a home immediately, right? And so what I love about the rent-to-own program is that it gives you optionality. So for example, you can say, okay, I'm going to move into this house and I'm going to pay rent on it for a year, for 2 years, and say, okay, do I like this? Do I want to, own this home? And then, if I have the option to be able to walk away and move and go and live somewhere else and give up that rent, then, that's great. But then if I have, if I want to take up the option of, purchasing it, then a portion of all the rent that I have paid goes towards my deposit, and then it converts to 100% financing. So for me, just the notion of, one more tool, one more mechanism that allows people to acquire assets easier, I am all for it, because for me, I feel like, that is the way that we're going to build Jamaica, So I think they're onto, and that's kind of like the root of my disappointment with the wealthy plan, is because they came out with this rent-to-own thing. I liked it. I thought about it, and the more I thought about it, the more I liked it, regardless of whether or not the 100% financing is there. And I agree, it is there. But again, this is one more, and so I was expecting more of that, and I didn't see more of that. So.
Right. So I agree with you, Mark. So I really liked the rent-to-own plan that the PNP proposed. I like that they addressed entrepreneurship. So both the PNP and the JLP touched on ownership of assets in terms of real estate assets, and they focused on entrepreneurship. What was missing from the PNP's plan for me was looking at the investment side. So the JLP has done a lot, reviving the junior stock exchange, divesting government assets through the stock exchange, tens of thousands of new investors signing up, and the PNP comes with a wealthy plan and doesn't address the third plank of wealth generation, which is investment. So I was disappointed in that. But Dashan, let me give you the last word before we go. What do you think do you think that was an oversight by the PNP?
Well, I don't know, but if they're going to be creating wealth, some of what they are being creating wealth, if you're talking about investments with creating entrepreneurs and building out the digital economy, as they say, and then they have touched on investments without mentioning the word investment explicitly. What really was disappointing for me in the PNP's manifesto is no explicit indication to the manufacturing sector. They mention it none at all in their manifesto. And I read it twice and I said nothing about the manufacturing sector.
Wow.
Is it that they don't care about the manufacturing sector?
I didn't even really notice that.
And the COVID-19 pandemic has made it clear to us that we cannot stack all our eggs in one basket. We have been depending on tourism for far too long. And as soon as the tourism sector has gone down, our economy has gone down as well. The dollar has begun to depreciate, but one could argue that the dollar was depreciating before tourism began to lose money from tourism. But to see one sector of the economy go to zero, and when it went to zero, we are in a tailspin, is really disheartening. I remember earlier this year when at the onset of the pandemic in February, I was on TV and the host of the program said to me, Dash, what do you think about this pandemic? I said, this pandemic is going to teach us how we have to depend on ourselves. The agricultural sector will have to play a bigger role. The manufacturing sector will have to play a bigger role because these things we can control.
Yeah.
But we can't control tourism. If people are not traveling as this pandemic is turning out to be, because people are trying to be physically distant from other people, then we have a problem. If you can make something and send it abroad, it's different. If you can grow your own food. I mean, this pandemic interrupted logistics chains across the world. So we have to look back at that. And one of the other thing about the manifestos is that I think more in the JLP's manifesto than the PNP, they pointed out to things that they will do to tackle things like predial larceny. But we have seen it over and over again where I believe governments pay lip service to the agricultural sector as well. It seems to me like for them to get by, they talk pretty, both sides, about what they'll do for agriculture. But when it comes down to the nitty-gritty and look at what really should move this sector forward, most people don't go into agriculture because of predial larceny. You talk to any young person who has a desire to farm, and what they'll tell you, boy, I can't go farm because I don't want the owner for the farm come take away the stuff that my farm when I'm going about my business. And that's discouraging. So you have to address stuff like that crime. And yes, the JLP was more explicit in addressing the crime in their manifesto. The PNP mentioned it. They mentioned some areas in which they are...
Strangely, and the PNP has been the one calling for a crime plan for the past 4 years. It's not as explicit in their manifesto. But on that issue of the exports, I absolutely agree with you, Dashan. And that's why I asked 2 questions that I expected to hear answers related to exports. During the debates, I asked about how are you going to make the economy less reliant on tourism. So I thought exports, ding, ding, ding. And the other question I asked was about the dollar too. How are you going to address the dollar? And to me, the answer should have been boosting exports. So earning more foreign exchange through exports rather than the reliance on tourism. Essentially, it's the same question as 2 different ways.
Let me say something quickly about what you're saying. There's this graph that I've looked at whereby between 1997 and 2019, the tourism sector doubled in size in the value added it gives, while the manufacturing sector and the agricultural sector went down by about 40%, losing in that period. At the same time, the dollar moved from something like 41 to 1 to about 132 to 1. And whenever a currency depreciates, it would create more competitiveness in that currency. So it's not only about exports, but we should look to identify the causes of the uncompetitiveness of our currency, where we are seeing a depreciating currency long term, even though in recent years it has been going in 2 ways, but the trajectory is still a depreciation, but we're still not seeing a commensurate increase in exports. We had exports $1 billion in about 1997, but in 2019 it was $1.5 billion, barely any growth over that period when the dollar, the value of the US dollar more than tripled. So we have been losing, our currency is depreciating, which should have been making us more competitive, but in real terms, our exports are not growing.
Dashan, one thing I think those statistics hide is the fact that, you know, there is like a major export sector has collapsed, which is sugar, right? And I think if you dug into it some more, you would see that, it is, there's a significant, and then also,
and bauxite,
and bauxite and stuff like that, where, have significant dislocations over the last, 10, 15 years and fluctuate significantly. But speaking about sugar, speaking about supporting manufacturing or whatever, and you have, on the one hand, the sugar industry is dying, and the government has tried many, many times to revive it unwisely, in my opinion. And then now we have Dr. Phillips talking about, revive sugar, and I'm just like, we need to get past these old ideas, embrace the future, and sprint straight towards the future. We don't have no time. We don't have time to be dithering around with sugar.
But apart from those two, bauxite, sugar, and the decline in them, a competitive currency should encourage a manufacturer to produce otherwise for exports. Because remember, it is companies which export and not countries.
Right.
If I see an opportunity in the export market, I'll be exploiting it. What I'm pointing towards really is that there are other impediments to export other than
they need to even solve the payments issue, getting paid from abroad, a huge issue. So many people, so many small, Mark, you have TCP things. How long did it take you to figure out how you're going to get paid for these bags from abroad?
Yeah, I know. I mean, in our case, we had to go and register a company in the US and get a US bank account, and that's just because I have 10 years of experience doing this, that I knew that is the way to do it, right? But I mean,
you're going around your impediment,
right? Well, yeah, I mean, I'm going around all manner of different impediments, but the truth.
And how many people have stuff that they would like to sell, have great products to sell that other people are willing to pay them US dollars for, and they just can't figure out how to get paid.
But what I will say, Kalila, to that point, I agree with you 100%, because the truth of the matter is that our economy is just not structured around, it's not diversified enough. Our economy is heavily dependent on agriculture, tourism, mining, right? So anytime any little thing happens with any of those industries, it pulls on our figures. And so what we've seen over the last 4 years is that, the current administration has been making a concerted effort through the DBJ, through a whole bunch of different stuff. And then as you said, Kali, or Dashan, the manifesto, it reads like a budget speech. It is the complete embodiment of continuity. And when I read it, and Dr. Clark actually said it in the debate, it is a sober manifesto. And when I heard that word, I got so excited, because for me, there's
sober got you excited.
Yes, because that's what you want in the plans of our government and government spending. Whatever. What you want is, you don't want grandiose big promises. You want sober, responsible. Just like
you might be in the minority, Mark. People like the grandiose big promises.
I mean, maybe Khalida, but I tweeted about it, and then that tweet.
And when you're 16 points behind in the polls, you might need it. Need it. But let's leave it there, guys. It was a great conversation. I really enjoyed talking with the both of you.
Absolutely.
Thanks for joining me.
It was great. Thanks.
Dashan, Mark, later.
Yeah, thanks much.
Check out Teacher K's Light Bill Mats up next. After that, I've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agency. Insurance made easy. Remember a couple months ago when oil prices dropped so low, we actually had negative prices? A lot of you asked, well, how come my light bill didn't go down too? I'm Teacher K, and here's another episode of Light Bill Mats to explain. Now first, let's do a quick revision. Take out your light bills and take a look at these line items. We already went over the meanings and calculations of foreign exchange adjustment, or FE adjust, how the exchange rate affects your light bill. We also went over a big one, GCT, or general consumption tax. And last week I showed you how to estimate your own bill, just like JPS sometimes does. Well, today let's take a look at this line item, fuel and IPP. The fuel and IPP charge on your bill combines two factors. One, the cost of fuel that's used to generate electricity, and two, the cost of the electricity supplied by privately owned power plants. We call these suppliers independent power producers, or IPPs. We have quite a few IPPs. There's Jamaica Energy Partners, Jamaica Private Power Company, Jamalco, and of course, Wigton Wind Farm. Now, fuel cost is a big contributor to the fuel and IPP charge. Fuel is used to generate electricity. About 70% of the fuel that JPS uses is actually not oil, but liquefied natural gas, LNG. It's a byproduct of oil production. JPS has a long-term contract with New Fortress Energy in the United States to supply LNG, and that's why when oil prices crashed this year, your light bill, my light bill, didn't really go down. However, JPS did announce in June that there was a modest reduction in the fuel and IPP charge since they do still use some oil. Here's something that you may not have known. The fuel charge on bills reflects the actual cost of the fuel that JPS uses to produce electricity. That cost is directly passed on to customers' monthly bills without a markup or profit to JPS. Now, JPS isn't the only one that produces electricity in Jamaica. While they may have a monopoly on distribution, they don't have a monopoly on production. There are a few independent power providers, IPPs, which I listed before, that JPS buys electricity from. More than 1/3 of the electricity in our homes and offices are supplied by IPPs. Some of the costs of the IPPs are reflected in the fuel and IPP charge line item. But this portion of the fuel and IPP charge is usually very small, like less than 1%. Now, on this light bill, the customer used a total of 195 kilowatt hours for the month. The fuel and IPP charge changes every month. On this bill, the rate is $21.87 for every kilowatt hour of electricity used. So to calculate the fuel and IPP charge for this customer, we need to multiply 195 by $21.87, and that's going to give us $4,284.02. Well, I hope you learned something new today. So now I've given you all the different components that make up your light bill.
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange declined last week with the combined index losing less than 1%. 98 stocks traded across both the main and junior markets of the JSE for the week ending Friday, August 28, 2020. 28 advanced, 60 declined, and 10 stayed the same. 133 million shares changed hands on the Jamaican dollar market, totaling $1 billion. Carreras traded the most, taking up 34% of market volume. The stock lost 37 cents to open the week at $6.30. Trans-Jamaican Highway traded the second most, with people buying and selling nearly 70 million shares in the company. The stock gained 7 cents to close last week at $1.28. And Wigton Wind Farm ordinary shares was also among the most traded, taking up nearly 12% of market volume. The stock lost 1 cent to open the week at 79 cents. Now let's see who else had the biggest gains. Caribbean Flavors and Fragrances rose an astounding 58% last week. The stock starts this week at $18.46. Epley is up 25% to close last week at $22, and Express Catering gained nearly 20%, its stock ending the week at $3.95. On the losing side now, Siboney Group fell 15% to close last week at 11 cents. Main Event Entertainment Group fell 14% to end last week at $3.40 a share. And CAC 2000 9.5% cumulative redeemable preference shares, 14% down to $1.03. Now here's a quick look at some of the highlights for the month of August. The main index declined by less than 1%, while the junior market fell 4%. The financial index lost nearly 2%. Caribbean Flavors and Fragrances came out on top as August's biggest gain, its stock up nearly 68%, and Epley was second for the month, up 51%. Consolidated Bakeries was the biggest loser, down 21% to start this new month, September, at $1.35. And Elite Diagnostic was the second biggest loser, its stock price down 60 cents to close August at $3. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment analyst at Proven Wealth, Julian Morrison, and Assistant General Manager of Trading and Treasury at JMMB, Greig Lindo.
Hi, Greig. Hi, Julian. Welcome back.
Hi, Kalila. What's up?
Yeah, so we have some news to report on the economic front. The Bank of Jamaica is revising their estimates for GDP growth. So they're expecting the economy to decline by as much as 10%, so between 7 and 10%. What does this mean for confidence in the market, Greig?
Well, I think the confidence is going to continue to be challenged. The impact of COVID has still not fully manifested. So this projection by BOJ is also a projection. So the more we see measures implemented to restrict movement, the more we see what's happening on the global side with the pandemic is going to impact trade. So what it brings is more uncertainty. And, of course, with more uncertainty, we mean lower confidence. So, I think it's not going to be positive for the market, but it also reminds us that, there's still a lot of, we're not through the pandemic as yet, and we need to be extra vigilant as to what is happening in markets, not just in Jamaica, but globally.
Julian, do you see the news actually having an impact? Because BOJ isn't really telling us anything we don't already know. They might be giving us the actual numbers, but anecdotally, we see what's happening.
It's good for us to have some kind of indication from the Bank of Jamaica. Yes, we would have known that there's some level of severity from the base case, but having a revision from the BOJ would help to paint the context of what to expect. So what we're really doing is adjusting our expectations of what we already knew. Now, it's not a complete surprise, given that there's a downward revision, but the magnitude, especially from a credential body, a credible body, it really puts a spin on the situation. So yes, it could impact market sentiment and the expectations generally in the financial space and the economy on a whole.
Greig, the dollar continues to slide as well, and naturally that causes concern among a lot of Jamaicans because it affects their buying power. The BOJ has consistently tried to say it's not the only thing that affects their purchasing power. Focus on inflation instead. What's the best and worst case scenario, Greig?
The dollar is going to remain a point of interest for the public because on one hand, BOJ wants to control, well, I shouldn't say control, but they want to intervene where necessary to ensure an orderly depreciation. But the fact of the matter is the FX market is going to be heavily influenced by the ability of earners to actually have inflows coming in. Right now, we see what tourism is like. I mean, it's open, but it's nowhere near its capacity. So that in itself is going to cause some amount of pressure on the market. And because of that, persons are going to maybe want to shift their portfolio when they have availability of US dollars to get. So the best case, the BOJ does have a significant NIR that they can continue to address temporary market volatility. But, the worst case is, if inflows don't come in, there's a limit to what they can do. So the idea is to have, once the economy reopens to a larger extent and we can get commerce flowing in a more normalized way, then the fears regarding FX will somewhat subside. But right now you're in a position where that's not completely clear as to when it's going to happen, because we're in the middle of a spike right now. So that's going to probably drive persons to a safe haven, which unfortunately for the Jamaican dollar, people tend to want to hold foreign currency.
So you still see US dollars as a safe haven?
For some people, I know that betting on US dollars has been, speculation has been something that persons generally have done in the past years. I think it's less so the case, but once there is market uncertainty, some persons may still revert to that, because when you see the dollar move across 150, that's a psychological barrier. So the BOJ has to then kind of say, all right, based on inflation, this is what they're going to do. But persons may still feel the need that, listen, I may need to protect my portfolio. And sometimes holding US dollars may be what some persons choose to do.
Mm-hmm. Let's zoom in on the stock market now. So I see news announced in the last week, that Derrimon Trading is looking at an APO, an additional public offer. They would be the first junior market company to come to market to do so. So Julian, what are your sentiments towards Derrimon and a possible APO at this time?
Well, Derrimon has been a company with good economic characteristics. They've been able to grow both their top line and their bottom line. They've been fairly disciplined in managing their balance sheet in terms of their leverage level. So in terms of management skill of creating value for shareholders, based on the historical performance, we are seeing that Derrimon has really set a precedence where they're able to show that they're worthy of raising additional money. It's not raising money just to pad the business up or for a defensive reason, like trying to make a bad situation better. What they're raising money to do is to make a good situation even more valuable for shareholders because of what they've already been able to do with the capital they already have. The other thing with Derrimon is that it's fairly held in a way that makes it illiquid. So it's tightly held by the top 10 shareholders. So the availability on the market is scarce. And that's a way to increase investor participation and increase liquidity for the stock.
Mm-hmm. And Derrimon is one of those stocks in the manufacturing and distribution index, which has proven to be quite resilient to COVID, Greig.
Right.
Yeah, the consumer staple segment is pretty defensive in a time such as this, because persons still need to consume basic products, and Derrimon does some amount of manufacturing with its own line of food products, and they also distribute the more wholesale type products. So it's a good sector. It's a good sector to be in a time like this. Certainly better than tourism, right? So it's definitely a plus for them, and I think that looking at an APO for them, in a time like this, there are opportunities that maybe are bound, to merge, consolidate, expand. So this may give them a good footing to position themselves to grow further.
Julian, I note some news as well from Caribbean Flavors and Fragrances. They're eyeing a stock split. What can you tell us about that?
Well, CFF has also demonstrated robust financial performance. They have been very focused on their core business. So it's good that they're able to look at how liquid the stock is and determine whether or not they want to increase that liquidity, because CFF is also tightly held. But it's another solid company on the junior market. It's actually one of the best companies in terms of fundamental attributes. So profitability, cash flow management, looking at the leverage levels, it's another solid company. So it's a good opportunity for people who want exposure, who couldn't get that exposure before, to a company that has actually been doing well financially.
And guys, viewers, listeners, if you're new to investing, check out Money Mondays JA, What is a Stock Split? The link is in the description on YouTube. So thanks, Julian. Thanks, Greig. All the best.
Thank you.
All right,
Take care.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at takingstock-ja.com and turn on those post notifications so that you can be the first to see all of my features. The goal is to get to 50,000 subscribers. We want to help people learn more about money so we can all get this money together. Now this week on Money Mondays JA, I look at the possibility of having a digital Jamaican dollar and what that could mean for you. And on Money Moves JA with Exim Bank, Mike McKelowicz is back to tell us why you should actually fire some of your clients. Follow me on Instagram and Twitter at Kalila Ray and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Now, congratulations to last week's winner, Nicholas Beckford. You've won one of our exclusive Let's Get This Money t-shirts. Email orders at KalilaRayMedia.com to claim your prize. And it's time now for this week's giveaway question. So last week, the analysts discussed Apple's stock split. Oric Angus suggested that there are other large companies about to follow suit. Which companies did he name? You have until September 5 to answer in the comments, and you can win a lovely Get This Money t-shirt. Of course, if you want to order one for yourself or someone else, just email orders at KalilaRayMedia.com and we'll hook you up. Now tell a friend about taking stock. Investing is the new sexy, so let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.